Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, everyone, to Real Estate 360 Live. I am your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, Real Estate 360 is designed to build the Washington, D.C. metro's market by giving you good free advice. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030, or via the web at realestate360live.com. That's realestate360live.com. So before we went to break, we were discussing homeowners taking a big chunk of savings or retirement to be able to refinance into these super low interest rates. And one of the things that was also interesting in this article, that there was someone, I want to say it was Dean Mackey, the chief U.S. economist at Barclays, basically had said that paying down mortgage debt is bad for economic growth. Putting your money into your house usually means you're spending less. It's good for our economic health in the long run, though, because it improves household balance sheets. And I mean, I don't know what side you fall on here, Louis, but I mean, I think that it's a great thing for the overall economy if they see that the long-term benefit of having, sub 4% interest rates. It far outweighs, the short-term economic implications of money not entering back into the market. Would you not agree?
I fall on the side that savings and production are good for the economy, not spending just to spend it. Debt is good if it goes towards production. Debt just to spend on things that you don't need with money you don't have is not good for the economy. So if people are paying down their debt because they can pay it down at a low interest rate, that makes some sense.
Yeah, and I mean,
instead of spending it on new consumer goods.
They've also stated that, with the refinancing, that the average mortgage period has actually dropped, I believe, from 29 years to 27 years. And what that really means is that's just an average of, what if people take out a 20-year fixed, a 15-year fixed, so that the time period, people are actually reducing the terms of their loans as well.
Now, I would disagree with that. I think it's good to get a lower rate of payment, obviously, so you pay less and to pay it down. But if you anticipate inflation, I think you want to be paying your loan out over a longer period of time than a shorter period of time at that rate.
Yeah, and I think that also it gives you that that long-term stability of the 30-year period. And for the people out there that are like, well, I want to really minimize the interest that I take in, you still, or pay rather, you still have the ability to prepay more principal on top of your 30-year fixed mortgage versus binding yourself into a 20-year fixed or a 15-year fixed.
Right, but at low rates, it doesn't make sense to pay it back.
Yeah. Absolutely. I mean,
unless you're trying to free up more credit for something else.
Yeah, I mean, if their goal is to just, hey, we plan on retiring and be able to roll this equity into another home. I mean, I don't know what it is. Right. Obviously, that's why I always tell people it's important to make sure that you're sitting down with a professional that can, analyze your individual situation and find out what's going to be best for you.
Absolutely. It's not a matter of what is the best in general. It's what's the best for you.
Yeah. I mean, you have one couple that has $1 million in the bank and you have another one that has $10,000. I mean, you're going to handle that completely different.
Right.
And I think that that's critical because I think that, a lot of the information that's out there on the internet, it's not, basically set up to where, you can enter in your information and it's going to give you a detailed report of what you should do. It's just like, take advantage of these great interest rates. Well, while that's all fine and dandy, it's important that you're taking out the right program. It's important to know how long you plan on staying in that home. It's important to know whether, you plan on, using that as a bridge the gap to move to, to buy another home in another 5 to 7 years. So you can plan for all these things. I know all too well that, a lot of people don't treat like buying a home, as a long-term investment anymore because, equity is not rising as fast as it was before. But I think that it is smart. It is a form of forced savings because you do have some of your payment that's actually knocking down the principal. Now, while, you might not be getting 10% year-over-year returns on this, you're protecting your long-term shelter costs.
Sure. Look at it from the point of view of your ledger. it is your largest expense.
Yeah.
And by locking down a long-term, low interest rate mortgage, you are keeping that expense level down.
Yeah, and I think a good way to look at this too is, I'm always talking about inflation and the threat of inflation, and when it does, rear its ugly head to the fullest, we could see these substantial jumps in everything. And let's just say that's 10 years down the road. But if you're renting and you just plan on renting for the next 10 years and you're paying $2,000 now, there's nothing stopping you from paying $3,000 10 years from now.
Well, whereas at the fixed year, you're still paying $2,000.
Exactly, and that $1,000 difference, you know what I mean, a month is huge, and to have the peace of mind to know that you're not going to have to worry about anything for 30 plus years.
Not just that, Ryan, but the $1,000 a month will help you pay for your groceries because they'll be going up too.
Yeah, and this is the one thing that nobody ever talks about because the government, nobody wants to talk about this, or they'll strip out numbers as far as the inflation numbers that the Fed puts out there. They'll strip out the food and energy, the most you're probably your most expensive things or gas and groceries. So they don't want everybody to be on to them and to understand that this is a major thing. And I always tell people, try to put yourself in a position as fast as you can to be able to take advantage of these rates. And for some people, I know that you may have lost your job, and you can't take advantage of them right now. But there's programs out there, as quick as 2 years, and I still say, 4, 5, 6%, they're great interest rates. They're great.
And the reason the inflation is inevitable is because the United States already owes $16 trillion, has over $100 trillion in unfunded liabilities. And the only way they're going to be able to pay those is by printing up the difference, which means increasing the money supply, which means more inflation. The United States is not going to default explicitly and say we can't pay. They'll print up the difference, and when they do that, the value of the dollar is debased, and you have inflation. That is happening, has happened in the last 30 years on an accelerated basis, and will continue to happen. And 10 years from now, you will be very pleased if you're only paying $2,000 a month for your mortgage when rent has gone up because they're just a direct result of inflation.
Yeah, I mean, the government, Congress, the Fed, they're all doing things right now that are completely going to be disastrous later on down the road. They're not worried about the long-term implications because they just want to, fix things right now, kick a can down the road, and just hope that all of a sudden employment just gets better. And that's not going to happen.
In the stock market, the politicians are judged on their short-term results. They're not judged on longer-term results, so they keep promising things, and that costs money. And where do you get the money if you don't have it and you can't borrow anymore? You go to the Fed, and they print it up.
Yeah, it's interesting. This Thursday, Lewis, the Supreme Court is expected to rule on the Obamacare issue and whether it's legal, whether we shouldn't have it at all. So I think that actually might be that's going to be pretty much a big day, obviously for politics, but I think it's a big day as far as the employment situation goes as well. A lot has been said that a lot of the reasons why people aren't hiring right now is because of all the uncertainty of what's to come with this health insurance issue, and big business not wanting to hire people if it's mandated that everybody has to have insurance and their costs are going through the roof. So it'll be interesting to see what happens on Thursday with that ruling. I do think that a lot of our employment situation and the hiring freezes that a lot of these companies is mainly due to this. Would you agree with that?
I would agree. I think that there is uncertainty in the cost. I know that the insurers are in favor of this because they get guaranteed access to another 30 million more customers would have to buy insurance. My view is that it's unconstitutional for a number of reasons. One, just health care in general is not included in the enumerated powers in Article 1, Section 8. But two, the mandate itself, having the government creating commerce and then forcing you to participate in it, irrespective of the rationale of it, is unprecedented because I think one of the justices did ask one of the questions was, what can the government not force you to buy if it forces you to buy insurance? I mean, how do you stop the government from basically controlling your economic life and telling you what you can buy and how much of it you should buy and so on? So I think they'll strike it down, as they should. And then I think there'll be more uncertainty because there'll be a mad scramble to try to figure out what's next.
Right.
You'll have the single-payer people on one side. You'll have the government out of health care on the other side. And there'll be more uncertainty.
Yeah.
I don't know if it'll solve anything, but I hope they do strike it down on the mandate, because I think it's tyrannical for the government to be able to say that you need to buy something because we say so.
Yeah, you must have this because
noble reasons, because, the road to hell is paved with good intentions. Because once the government can decide what's good for you, they can decide what you need to buy and how much of it you need to buy. And I don't think that's what people want. And I think the Supreme Court justices asked those questions, and that kind of took the people who were in favor off guard, because they were thinking that this was kind of a slam dunk constitutional issue, that they were going to be able to get this through. But I think when it comes down, it'll probably be a 5-4 or 6-3 decision, stating that at least the mandate is unconstitutional.
Yeah,
that kind of eviscerates the guts of the whole program.
Yeah, I tend to agree with you as well, and it's interesting because it's like a control thing with the government. And if this actually, found its way through, it is what's next. What are they going to do next? Take my guns, take everything else, and then.
That's a good one. But the other thing is also it smacks of corporatism, because it basically creates a market for the insurance companies.
Yeah,
it's forcing the people to buy something from one of their favored vendors.
Right. I mean, and then on the other side, the government's here, wanting more and more people to take food stamps. I mean, like, they do all these things that are just, not good in general. I was reading that the U.S. Department of Agriculture spent between $2.5 and $3.5 million on paid advertisements and free public service announcements that to help people better understand the requirements of the food stamp program, that they want to get more people on welfare.
More votes if you're on that side of the aisle.
Exactly, and that's all that is. And I'm thinking, okay, so it's just...
You create dependency, and then you create votes.
Exactly, and that's what's going on now versus nobody talking about the debt situation, which we've discussed week after week. We're coming up on a break. When we come back, foreign nationals, home buyers are snapping up U.S. homes, and we'll let you know how that percentage is increased over the last year when we come back.